Good afternoon and welcome to your weekly FX Options Report. Today is Wednesday, December 2nd, 2009. As we kick off the month of December, we're seeing that the broader markets are trading mixed today. Now, in the previous session, the Dow did close at 2009 highs, and risk appetite has returned to the markets following a few sessions that did see global equities take a hit. Now, ahead of Friday's U.S. non-farm payrolls report, we did get the ADP employment report earlier this morning. The ADP reported that 169,000 private sector jobs were cut in the month of November. And taking a closer look at the spot FX markets, in the previous session we did see that the euro hit highs not seen since August of 2008 against the US dollar. Now, euro dollar did top the 1.51 level. And in the Eurozone earlier today, data was released for PPI, which showed a 6.7% year-over-year decline for the month of October. Meanwhile, the Japanese yen is consolidating against the major currencies. Now, Japanese officials continue to voice their concerns about a strengthening yen, and last week the dollar-yen did top 14-year highs. Now, Japanese Prime Minister Yukio Hatayama did say that gains for the Japanese yen can be left as it is, and it is unlikely that an intervention strategy from the government will be coming out. Now, earlier this week, the Bank of Japan decided at an emergency meeting to make 10 trillion yen available to commercial banks for short-term loans. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at ISC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And now we will bring you your FX options trend report for the major FX pairs. Now, let's start out by looking at AUX, which is U.S. dollar against the Australian dollar. In the short term, it is under pressure, and the RSI has hit against its neutrality area at 50% and is reversing down. Now, trading central analysts do prefer short positions below 112.50 with targets standing at 105.50 and 102 in extension. Now let's take a look at the BPX, which is dollar British pound. In the short term, the downside does prevail and the pair has struck against its resistance. It should reach its support as the RSI is currently turning down. The preference of trading central analysts for the BPX is short positions below the pivot of 62, with targets standing at 58.70 and 56 in extension. Now let's move on to the CDD, which is dollar Canadian. And in the short term, it is under pressure, and key declining trend line does maintain downward pressure. The preference of trading central analysts is short positions below the pivot of 108, with targets standing at 102.50 and 100 in extension. Now let's move on very quickly to the EUI, which is the US dollar against the euro. The pair does remain under pressure and is currently challenging its support. The preference of trading central analysts is short positions below 68.50 with targets standing at 65.50 and 63.30 in extension. And now let's take a quick look at the SFC, which is the US dollar against the Swiss franc. Now, the downside does prevail and the RSI is capped by medium-term declining trend line. The pair does also remain under pressure and is currently challenging its support. The preference of trading central analysts for the SFC is short positions below the pivot of 103.50 with targets standing at 99 and 97.30 in extension. And last but not least, let's take a look at the YUK, which is the US dollar against the Japanese yen. In the short term, it is under pressure and the pair has also broken below its support. The RSI is also badly directed right now, and the preference of trading central analysts is short positions below 90 with targets standing at 85 and 81.50 in extension. And now let's take a look in the next segment at your weekly trends for major FX option pairs. Now, last week the US dollar did continue to weaken and broke new lows against the Japanese yen. The trend is expected to remain in place for the rest of 2009. And now for your portfolio performance for Trading Central for since the beginning of this year, it is up by 635.03%, and since its inception, which was in August of 2007, it has been up by 1,266.02%. Now, we do have a few trade alerts for you, and we will begin with the PZO, which is the US dollar against the Mexican peso. Now, this week, Trading Central recommended in its follow-up to consider calls on the PZO. And this is because it is approaching its lower boundary range, and in addition, the daily RSI still is supported by a medium-term rising trend line. Now, Trading Central will also be taking a look at the EUI, CDD, as well as the SFC. And last but not least, let's take a look at next week. Now, Trading Central does think the US dollar will continue to weaken, but momentum is also weakening, so they are very cautious about opening new positions. And as a result, Trading Central will be looking at exotic pairs, including the AUX as well as the NZD. For the AUX, it has struck against its resistance and is expected to face another down move. And in terms of the NZD, it has rebounded more sharply than other currencies, but is approaching its resistance level. And that does wrap it up for your weekly FX options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.